amalgamation study on the NQ futures using a 5-minute time frame. This is a lovely study. It amalgamates various types of testing, that being of normal testing, hidden testing, and key reversal testing actions. So what do we know here? Let's just get into this analysis. So this is the US Open here, and we push up and then we come down. We can see we're in a downtrend within some form of structure. When we look inside the structure, we see demand. Good buying. Comes down, close off the lows. Comes down, close off the lows. It's popping volume. Popping volume, close off the lows. Buying here and buying here. So we know there is some demand in the market, clearly. There is something to note. When we come down here and we push up, we come down, then we push up here, we test the supply line from our channel and we get a good response on this bar here. We can draw in a local level of support. So this bar has good selling. Widespread, closes weak, popping volume. Agreed? However, as we now know, the close is under support, but it's not clean. We like to see 50% of the spread under our area of structure. But price is king, and we do break this area nonetheless. And then what happens? We have this action here, which is confined to a mini downtrend channel here and here. And look at this price action. 1, 2, 3, 4, 5, 6, 7, 8 bars. And there's no volume. Where's the volume gone? This is very suspect behavior. One would think, after we reject the supply line, or we respect the supply line, should I say, we get good quality selling. Why are we not coming down with ease of movement? Why are we holding here with very low volume? Okay, there's almost as if there's no supply in the market. Then boom, look at this bar. We fall out of bed and we hit the demand line, and we've covered this in previous sessions. This is some kind of climactic behavior, and it likes to do this in structure, and we can see there's buying off the lows from the close. So there is some buying at this demand line, and we fall out of bed after some suspect supply after we get some good selling. So anyhow, so there's buying from the demand line where it should be. From this bar, we would still expect some sort of downside follow through. And D1, this bar here, we come down, dip under, and reverse. We close in the top third of the bar. So we close well off the lows with slightly higher volume, and the spread is narrower than the previous down bar. So there's a slight case of effort versus result, and it feels as if we're trying to hold. It just feels as if prices, the sellers aren't having their own way. Agreed? We're not coming down like this. We have high volume and we only net. It's a good way to think of it. This close to this close, we only net that much downside progress with all this volume. On this volume, which is slightly lower, we net from this close to this close. So we gain a lot more downside progress with lower volume. So we know that there must be a lot of buying in D1, which we can tell from the close. We know this to be shortening of the thrust in the closes. So the market from D1 does indeed push on higher with good demand at 1. It has a wide spread, closing firm. It dips under this price action to reverse and close firm. But what's important about this bar is it wipes out all of this negativity. Okay, this was our original breakdown bar here from the suspect selling or a lack of selling pressure. Then we fall out of bed, and now we're wiping out all of that negativity. So this bar one here accomplishes a great deal. This is significant action. The market had ample opportunity for lower prices on this bar here. Agreed? Ample opportunity. Yet we held, and then we trade back within the channel, mini apex, dips down, reverses to close firm, over 50%. We're trading higher than 50% within the channel, and we wipe out all of this negativity. Now that is demand. If the market is weak, we should not be having this type of action. Sellers, therefore, have not capitalized. They have not taken advantage of their position down here. Good. This leads us to A, which is a key reversal bar. Don't forget, we're coming down. We dip under to reverse to close firm on fairly low volume. What is this key reversal bar doing? It's testing for supply. Because, you know, this bar has high volume, it does have a wide spread, but it just needs to make sure there's no supply before markup. And we can also draw in this level here, and we can see that it just tests the high of this bar here. I'm not going to put in every level of local support and resistance. I want us to solely focus on the testing action. And this makes it very clear, makes it apparent when we can just see the bop down on the move down, on the reaction down, which is weak at best, because why? We have this cluster in the closes. We're kind of refusing to go down. We dip under to reverse and close firm A, and this bar tests on very low volume supply. We want to make sure there's no supply in this high volume bar before markup, higher prices. So from A, we push up on this bar, nice pop in volume, and bang, we have another little no supply test. Spread narrows and volume declines. The market always likes to test. Just want to make sure before markup there's no further supply. Why? Well, because they'd have to absorb the contracts, and that costs money. So from this test, we drive up into new highs, and as we react, what do we note? Volume increases, and then we get B, which is a key reversal bar. However, it's a very difficult trade to take. Why? Well, because the previous bar has a spike in volume. So as we react, volume's increasing. That's not healthy. It's unadvisable. Yes, we close off the lows, which indicates a bit of buying, but very difficult to take the trade. Whereas, for example, here at A, we can take this trade comfortably. Why? Because there's many principles in play here. We have direct strength that wipes out all this negativity. We're holding the demand line, trading back in the channel after we've seen this strength, and then as we try to react from this buying, volume depletes, which indicates no supply. And then we get the lovely little test bar at A, or key reversal bar A. We can take that trade comfortably, as it's contextually correct. These closes cluster. It's just hinting we're unable to react after good buying. Excellent. And then a few bars later, after B, we get another little lovely test bar. In fact, this is a lovely trade we can take. Why? Well, because we can draw in this local level of support, which we have held for 5, 10, 15, 20, 40 minutes we've held this. And then we have the lowest volume down bar since this mini trading range has begun. And where are we? At support. And what's it testing? It's just testing this bar here because it dips under, reverse to close firm. Just need to make sure there's no further selling. So we could trade this bar again comfortably. From this test bar, we push up and we come back down, which leads us to C, a hidden test where we dip under local bars to reverse and close firm on what? On extremely low volume. Another trade we can take. Now this is a lovely trade. Why? Think about this. We have a strong up move which breaks a structural element. It breaks this area here with this price action with increasing volume. That is very, very important to us. And from the highs, what do we note here from the highs? Use our comparative analysis. We're going to compare the down waves. So these two bars here, from B to T to C, what do we note? We are making higher lows, and here we can't even react. We're holding a mini shelf of support. Okay, therefore, if we're unable to react and holding high levels of support, this is bullish behavior. So now this little test at C becomes crystal clear. We can buy comfortably as odds favor higher prices. Also at C, where are we? We are in a previous area of supply. Last time we're here, we come up, we react, come up, react, come up, react. We come up here and we can't react. We're holding higher lows. Okay, and then importantly, what we've learned today is, don't forget, demand has now proved itself and taken control. Look at the buying here. Look at the buying. Demand has proved itself. Now we use our comparative analysis for the reactions here, here, and here, and we can see there is no supply. The attempts to react are getting weaker, resulting in high lows. And it's amazing how we can piece this together. We're unable to react after this solid move up with excellent buying. Truly is a wonderful, wonderful trade once you understand what these test bars are doing. So we can buy T, we certainly buy C, buy B, very difficult. Before we finish up this chart, in a previous session we've spoken many times about falling out of bed after, sudden moves that appear rather wacky, in a sense some sort of climactic behavior. And in this flavor or interpretation, if we will, we don't heavily test the lows down here. I mean, what I mean by wacky is this move here that we see no supply and then bang, we fall out of bed on this bar. And as we come back down and we hold here and we drive up, we don't come back down to test in this area, this high volume or this volume here. And this makes the trading rather tricky. Instead, we get a solid up move from here. These conditions can be very difficult to jump on board, especially if one is unfamiliar with testing. The only way, or the only clean opportunities I can see to trade here are test bars. The market does not provide any other clean forms of entry. The market often has days like this, where we have these sudden wacky moves after no supply. And this action creates somewhat of a frenzy and unfavourable trading conditions. Well, what do I mean? Well, here we have good selling. And here, to the uninitiated, this looks like good selling. And what would happen? We've got all this area here under structure, I'm sure people will be drawing in this trend channel, and you'd have all the traders who will just sell stock or get involved with the market here, and they will be trapped. And that's a big trap. That's what, say 6 points. That's a lot of contracts. That's a lot of trapped traders. So as we rally back up and we get to around these highs here, it's unsurprising that there's congestion here. Why? Well, first of all, we'll have support and resistance traders selling here because it's resistance. We'll have the sellers over here defending their positions once again, and also these trapped traders. This might be, or I would think that this is the last line. This is the line in the sand where they can hold the pain no longer, and they have to liquidate their trap positions for a loss, which is why we have this congestion over here. And this also leads on to why this testing is very important to behavior or characteristics to be able to recognize, because these moves are very hard to jump on board without knowing testing action. And on days like this, volume does play an important role to play, but because of this action from this bar and this bar, it will spook out traders, and it's easy to push the market up with very little volume because there is no selling friction. The bears or the sellers have been spooked, and that's very important information to be able to recognize that live is invaluable. And this is why testing action is very important, and time should be spent understanding the behavior. Out of all the concepts and principles, it's definitely the most challenging and difficult to fully grasp in one sitting. I would urge you to spend time and look for tests yourselves. I mean, ask yourself, if you think it is a test, it must be testing something. So look to the left, look for wide spreads, or look for high volume bars and areas of structure. Good. To wrap this up, testing is very ambiguous. It's not as straightforward or linear as other concepts from the methodology. From a personal standpoint, strict no supply tests are the most useful. The market on occasion will also provide lovely hidden test scenarios, and key reversals are useful from my experience in full out trending conditions at the end of weak pullbacks. So say we've got a lovely trending up like this, and we got a channel, and we pull back here, back to support line, back to a support line, back to a support line, and we have a little key reversal. These are invaluable, but they must be full out trending conditions for these key reversals to really, or I should say that I pay close attention to key reversals in this environment. And the same applies to a downtrend, and we look for weak rallies, we're looking for a key reversal down bar. Good. This concludes the amalgamation study for test.